Just a couple of weeks ago, Warren Buffett made a statement that caused most of Wall Street to lose their minds. At the famous Berkshire annual meeting this year, Buffett said he would rather bet his money on monkeys with throwing darts to outperform financial advisors. This brutal truth raised a lot of eyebrows and made financial advisors feel really uncomfortable. In this video, we'll go over what that quote actually means and why it's great news for you as an individual investor. Welcome to ALUX. Investments are the main way most people get extremely rich. There's no secret here. You own something that increases in value over time, and then you sell it. And depending on how your luck goes, you could become an overnight crypto billionaire, an over 80-year stock billionaire, or straight up homeless. Now, since the game could go either really, really well or extremely poorly, a new player joined in. Enter Wall Street and legions of financial advisors. They have only one job: to make you feel like you need them. And in their quest, they make investing sound way more complicated than it really is. The reality of investing. The possibility of getting extremely rich by seemingly doing nothing in particular makes people lose common sense. They borrow money they can't afford to pay back, they sell their houses, they spend their kids' college funds. It's a reality that has ripple effects throughout the market. If you check out investment trends on TikTok, which apparently is the place where a lot of people get their investment advice, you'll find something very particular. There are a lot of people boasting about the price they bought something at versus how high it is now. This plays on the general rule of investment: buy low, sell high. But when people try to buy really low and sell really high, mistakes happen, big ones. How many of you have watched The Wolf of Wall Street? Jordan Belfort became extremely rich by exploiting people's desire to get a lot of money in a short time. The story goes deeper than that, but we'll leave that to another video. The important part of investing most people fail to see is time. Ironically, they invest all of their resources trying to bring the time down, when in reality, you want as much time as possible. Let's look at Warren Buffett as an example. There's little debate whether he's the world's most successful investor or not, but what you may fail to understand is how exactly he gained that status. So let's give it a quick test. Pause the video and write in the comments how you think Warren Buffett made so much money. We'll give you a second. We bet most of you wrote something like, he studied a lot of companies which gave him enough knowledge to make the right calls most of the time. But the truth is, every house name investor does that type of research. Warren Buffett got so rich because he waited decades for his returns. He bought his first stock when he was 11 years old. He is now 91. His returns span out over the course of 80 years, twice as long as most of us have even been alive. So when you try to copy Warren Buffett, you think his strategy is knowledge, when in fact, it's just time. A long-ass time. There's no way to optimize for that. And his returns weren't even that high. In fact, if Buffett had retired in his 60s, nobody would have even heard of him. Take a look at this graph. The vast majority of Buffett's wealth came after he passed 60. Until then, he was just a long-term investor like millions of other people. In fact, if you were to copy exactly what Warren Buffett does now, you will most likely not get rich in the next 5 to 10, maybe even 15 years. The way he puts it, the investing game is fairly simple, but financial advisors and other investors don't want you to know that because that will mean the end for them. You see, financial advisors, they don't make money from investing their own money. They make money from telling you how to invest your money, and they get paid whether you turn a profit or not. If you invest $1 million through a financial advisor and you lose all of your money, you still have to pay the financial advisor their fee. Which brings us back to that monkey quote. Statistically speaking, if you, a monkey, throws a dart at a wall with American companies, it will become profitable in the long run. That's because every major company, specifically in tech, sees an average growth of 15% per year. Get stocks in a couple of them, then wait. That's pretty much it. There is, in fact, a funny experiment where goldfish randomly picked stocks based on where it spent more time in the aquarium. YouTube content creator Michael Reeves created a software that analyzes the position of the goldfish and buys stock purely based on that. And this sounds weird, but the video is an absolute joy to watch, and you should check it out after this one. So what was the verdict here? Goldfish Frederick made a little over $1,000 in a couple of months. To make things even more interesting, Michael put his fish against the entirety of the subreddit r Wall Street Bets. They lost. Statistically speaking, a goldfish outperformed the collective knowledge of an entire group of individual investors. So now, Buffett's monkey quote is starting to make a little bit more sense. This is what financial advisors don't want you to know. It's not about the knowledge you have, it's about how long you can survive playing the game. And for that, you only need time and common sense. Which brings us to the good news. First, let's take a look at why people lose money when investing. There are two main reasons why this happens. One, they over-leverage, meaning they invest way more money than they can afford to lose. And two, they try to time the market, meaning they try to buy as low as possible and sell as high as possible, which is never going to happen. Warren Buffett himself said he never even tried to time the market since it's an unreliable strategy and nobody can see into the future. Now, we could add a third reason here in the fact that people expect to double their money every year and they believe knowledge is the missing factor. Sure, you can get lucky and make a lot of money on a lucky bet, but that's all it is, a lucky bet. There's no reason to believe you'll be able to do that every single year. If you ask, who is the wealthiest investor in the world, the answer is simple, it's Warren Buffett. But if you ask who is the most successful investor in the world, the answer is Jim Simons. You see, Buffett's long-term average annual returns is about 21%, but Jim Simons' returns are about 66%. He's 3 times more successful than Buffett, and yes, that made him a billionaire too. This is where the good news starts. If you want to become an investor and accumulate a decent sum of money, the answer is not how much return can you get in a given year. It's not what knowledge you can get from financial gurus to 3x your money in 6 months. That's not going to happen, and it will cost you a lot. The answer is, what's the maximum amount of return you can get over the longest period of time, which isn't even that high. 10% is a very respectable return anyone can achieve. Do that for 20, 30, 40 years, and you'll be good to go. There are plenty of platforms out there which make it super easy for an individual investor to buy some stocks. And if you don't know what to pick, we've got the perfect video for you. You might have noticed that the markets are down and recession is right around the corner. Good investors come out when there's blood in the streets, meaning everything is red, everything is down, and they can get stocks at a discount. Buffett said if you're serious about investing, you should constantly do it through thick and thin, and especially through thin. And Alexer, we're currently going through thin. We recently made a video with the 15 most undervalued stocks that we bought in this market crash. It's not financial advice, it's just an insight of our ALUX portfolio for those who are interested. You can watch that video by clicking in the top right corner or the link down below. And if you want more ALUX in your life, consider downloading the ALUX app. We believe it's the best coaching and self-help app on the market. Check out our link in the description to learn some more about it and start your free trial today. Thanks for watching, ALUXers. We'll see you back here tomorrow. Thank you for watching this video, Aluxer. If you found it valuable, consider subscribing to our channel and joining our awesome community. And if you're still hungry for more, we handpicked this video for you to watch next. Or head over to our website for more amazing content. See you tomorrow.